crew? In the last live stream, we spoke about parallel channels. This is one of my absolute favorite drawing tools and something I use every day. So here's a step-by-step tutorial. Stay tuned until the end. This is very, very fundamental to my own trading style and all of the technical analysis that I do. I work with parallel channels every single day, and I do believe that the charts at all times are running within significance within a parallel channel. First of all, is some assumed knowledge. Parallel channels is not for the ultimate beginner. It is more for the intermediate trader, but I want you all to get to that level as quickly as possible. So there is a little bit of assumed knowledge that comes with learning parallel channels. You want to already know how to draw in support and resistance. You want to already know how to use your RSI, your Fibonacci, and your moving averages. Those are all tutorials which are already in my crypto trading tutorials playlist. I would recommend using TradingView or Bybit for your parallel channels. If you need a discount link for TradingView, it's in the description. If you need a link for benefits for Bybit, it's in the description. A parallel channel is simply defined as two parallel trend lines which encapsulate your price. Simple, right? Simple. Okay, important to note a few purposes of the parallel channels. Number one is to identify trend direction. Number two is, of course, to identify your reversal points. Number three, to identify the breakouts from your current trend. And of course, number four, most important, to identify entry and exit points for your trading. Okay, so now I'm going to show you, first of all, an example of a beautiful parallel channel. Please keep in mind that, in my opinion, the best timeframes for parallel channels are the daily, the 4-hour, and the 1-hour timeframe. Right here, we're going to focus in on this beautiful parallel channel that we were seeing in our previous range for Bitcoin. As you can see, it is extremely easy to draw in. It takes 2 seconds. And remember, always confluence. Always try to use another indicator such as your RSI for confluence of your trading when you're using a parallel channel. So very important is to learn how to draw your parallel channels. Number one, you first need to identify your key support and resistance levels. We do this by seeing pivot points. The ideal way to draw in these channels is to notice your first pivot points and to try and use those as your parallel levels. Try to find lows and highs within your pivot points. Here we can see some high pivots, and of course we can see some low pivots, as well as some beautiful turnarounds at the bottom of the wicks. Very important, try to always use very clear support and resistance when you are drawing in these parallel channels. Here we can see a very, very clear level of resistance. Here we can see a very, very clear level of support. Number two is to actually then go in and draw in your parallel channels. In an uptrend, you want to look for your lows. In a downtrend, you want to look for your highs. As we can see here, we were starting a downtrend. So then we want to start by identifying the very clear resistance at our highs. If we are looking at the opposite, such as a parallel channel within an uptrend, we can try to look for the support. All right, the next thing is, of course, to locate your parallel channel tool. You can actually see here that it is my first tool on my favorites. Make sure that you favorite this tool so that you can easily find it on your favorites bar on TradingView so that you can use it every single day. You can also easily find it here at your drawing tools, right here under channels. So first come to your trend line drawing tools, find it right here under channels, and make sure that you favorite this indicator. Once you have identified your key resistance, you can grab this drawing tool and actually just draw your first line at your major key resistance levels. Then, of course, you can pull this indicator down and try to find the most touch points for your support levels. There is no exact way to do this. It is finicky and it does require adjustments over time as new info comes in on the price action. When you are drawing in your parallel line from your top resistance down to your support, try as hard as you can to envelop all of the price action. A nice way to do this, in my opinion, is to try and at least envelop all of the candle bodies. One thing to keep in mind when you are drawing these channels is always to be flexible, always be ready to adjust them, but always be consistent in the methods you use. One thing I like to do is to drop in more parallel channels which actually define each half into quarters. All you do is you take another parallel channel from your top resistance down to your median line. Then you take another parallel channel from your median line down to your ultimate support. As you can see, these quarter levels within your channels are also extremely significant. This is not 100% necessary, but if you really are moving towards being a pro trader, of course you want to identify these very significant quarter median levels. One thing I like to do is to take my top resistance line to the candle bodies, right? So to my most touch points of candle bodies that I can find. I then like to take the bottom line to my most touch points of candle bodies that I can find. I then like to draw in what I call extreme support and resistance parallel channels. Basically what that is another smaller little pipeline of a parallel channel from your candle bodies to the top of your wicks, and the same thing down at your bottom support from your most touch points of candle bodies to your biggest wicks. What this will do is give you your extreme entry level points and of course your actual level for the retest at a breakout. The next important thing is to understand how to incorporate this drawing tool into your trading strategy. This is quite simple. We simply look for our short positions at the top of the channel and we look for our long positions at the bottom of the channel. Of course, you need to use RSI as your confluence for these entries. Please do not use any indicator on its own or any drawing tool. No drawing tool is an island, right? Keep it in your head. Your strategy must have at least 3 to 5 levels of confluence in order to open any trade, which means that if you are coming down to the bottom of your parallel channel, you want to then look for another level of confluence, such as this beautiful bullish divergence which came in on the RSI at oversold. Boom, beautiful trade which worked out absolutely lovely on a 22% up to the short trade, once again playing out at the top of your parallel channel. One step further in integrating your strategy is to of course use a hedge trading strategy where you will keep open your shorts from the top and you will keep open your longs from the bottom until your stop losses are finally hit. And the reason to do this is that one of your trades will go into parabolic profit once the other trade stop loss is hit. This is an OG strategy used by some of the best traders in the world. When you are looking to enter a trade, if you see price coming down to your support, you draw in your trade so that you can identify where your risk to reward ratio should be in order to give you a very nice risk to reward on your trade. You can see here that you of course want your stop loss to be below the previous swing low of that wick with a nice bit of buffer, and that beautiful bullish divergence of course sent price up all the way to the final take profit. Make sure that you are taking gradual profits all the way up along your trades. I like to take my first take profit from the bottom at the first quarter median line, my second take profit at the major median line, third take profit at the third quarter median line, and final take profit at the top. Remember, if you are using the hedge trading strategy, you leave a little bit in this trade in case of a breakout and you add back to the open trade at the bottom. Same thing with the short. You always make sure that you draw it in. You put your stop above the previous swing highs, and you make sure that you have a decent risk to reward ratio down to the bottom. So some tips that I can give are to make sure that you are always using multiple time frame analysis. If you see a channel on the daily, zoom out to the weekly, zoom in to the 4 hour, just to check, is there extra confluence at those levels? And here we can see, boom, on the 4 hour, just how significant these parallel channel levels are, with bullish and bearish divergences, giving us extra significance at those levels. Zoom out to the weekly, right? If your charts ever confuse you, just go down to your settings and hit auto, and it will align the charts again for you. At the weekly, of course, we can see just how beautiful this parallel channel is, with, oh baby, just net, just wick at the top, beautiful sniper entries, and the same thing at the bottom, lovely sniper entries on your trades. One thing that you can use is the snap to grid function if you are new, and if you do struggle to find your exact levels, you can use snap to grid so that it helps you to align to the candle bodies or the wicks and give you your levels of most touch points. Something very important to note here when you are integrating this into your strategy is that you should be, of course, trading your longs from ultimate support. You should be trading your shorts from ultimate resistance. But at some point, every range will break. And this is where this breakout strategy can come in handy. Of course, you should be in your long from this beautiful double bullish divergence on the daily. I mean, this could not have been given to us on a shinier silver platter. But if you were looking for confluence on keeping your trade open, or if you were wanting to FOMO into this trend in a risk managed way, of course, you do not enter at the breakout. We can see here, entering at the breakout would have gotten you rickety wrecked, and we see this all over the charts. Breakout trading is a dangerous way to trade. A lot of beginners fall into the habit of breakout trading when you should be rather trading from extreme support and resistance. The only way to truly trade as a pro trader on breakouts is to, of course, watch for the break of a resistance level and then make sure you see a retest with volume. And right here on the daily, we can see the volume came in on the retest through the fact that we can see those beautiful wicks, and that, of course, could have been a nice entry into the parabolic uptrend. The ultimate entry would have, of course, been here at your ultimate support. Very important to recap is, of course, the use of risk management. Every time you enter a trade, you want to make sure that you are using your stop loss, and your stop loss should always be below your previous swing low or swing high. Another level of risk management is, of course, the 1% rule. In any trade that you are opening, you should only be risking 1% of your trading portfolio at each stop loss. So what I want to do here is go to current price action and just show a few of the examples of how beautifully these do play out. This is our current downtrend on the daily time frame on Bitcoin, and we can see that parallel channel is indeed exactly where it is at right now for profitability. We, of course, are in a highly volatile market at the moment. One of the reasons to use parallel channels, because they help you to cut out the noise and to understand the trend very clearly. We can see here why breakout trading is not a vibe, as many traders were getting wrecked in the breakouts. If you want to know when this trend is truly broken, try to draw in, as I explained, the extra pro level of confluence that I use above the channel from your bodies to your wicks, so that you know that this is only really over when we retest this ultimate wick resistance as support. And you can also do this at the bottom. Those who have been trading the breakouts have been getting wrecked. Those who have been trading the resistance as shorts and trading the support as longs have, of course, been winning chicken dinnering. And now on current price action,
we can indeed see a rejection taking place from the ultimate resistance back down to our median line. Let's do a quick recap on best practices. Make sure that you always use consistency when drawing in these channels. Make sure that you find your most levels of pivots for the resistance and the support, and make sure that you are always adaptable to new price info. Always make sure that you are tweaking to new price info that comes into the markets. All right, some of the pitfalls that you can encounter when you are drawing parallel channels. Number one is overdrawing, drawing in too many parallel channels, drawing in parallel channels where there isn't very, very clear support and resistance. This can just cause more analysis paralysis. And remember that parallel channels are actually there to help you clean the charts, to clear your analysis paralysis. Another pitfall is a lack of confluence, to trade only on a parallel channel. Remember, fundamentals are important. Be aware of your news, be aware of the sentiment, be aware of the sentiment that your RSI is telling you, be aware of your Fibonacci's, your support and resistance levels on a horizontal level also. A reminder, make sure you always use multiple timeframes on your channels, as this will help you get the exact levels for your ultimate support and resistance and give you your ultimate entries. Also, make sure that you always back test a strategy like this. If this is your first time including parallel channels in your strategy, make sure you back test so you can practice and make it perfect before you start to paper trade or risk any decent funds. Just to recap, first of all, understand parallel channels, how they work, why they work. Number two, make sure you set up your charts properly. Number three, make sure you understand how to draw them correctly. And of course, always backtest, always use risk management, and be aware of the do's and don'ts.
Thanks for watching, crew. Show the love with a like and a share, and subscribe to the channel if you're new. Also, be sure to join my Trading Academy on Telegram. And of course, always play from a position of power and strength.